Welcome everyone, I'm Pat Mitchell. Tonight I'm going to share with you the exact setup to use instead of revenge trading. Revenge trading is a huge issue with new traders because it is an emotional response to taking a loss, so they feel like they need to get that loss back. So instead of revenge trading, if you wait for this setup that I'm going to share with you and walk you through step by step, I'm going to show you a real chart example, and then I'm going to share with you a drawn example to make things nice and crystal clear for you. Let's get into the charts. Give me one sec. Okay, so we have Qs here. Qs actually worked out beautifully today, not only on the short, and I'll discuss that, and I'm going to share with you my entries here quickly, just so then you can see. So here are the entries on Qs, and I was looking for the short. These are options, and these are put options. So we take the trade short into the previous close. It comes up into our risk, which is this trend. This is mini trend. It comes right into it, top ticks it. Beautiful ad. Once it starts to roll and gives me a look of topping, I am going to add and then simply work this trade down. Now, if you were to take a loss on this, maybe you stopped out, you got freaked out, and you revenge traded some other ticker. Instead of that, focus on the single chart. One single chart. Whatever you start working on the day, and I'm going to explain why here, and I'm going to take these entries away here for a sec. So it's important that we understand to focus. What a lot of traders have a tendency of doing when they take a loss in a trade is they'll move over to another stock. They'll pick SPY or Apple or whatever garbage a person's trading. It doesn't matter, right? So what they're going to do is they're going to focus on that. Don't do that. You already have a good idea and a representation of the price action on the day. Don't switch. Focus. It will show you its hand of cards. It does it every single day. And that's why I have the consistency and the hit rate that I do, as well as my members. So I'm going to share with you this beautiful, beautiful setup. Okay, now that I've got my drawing tools up, let's rock and roll. So this is important. So I'm gonna talk to you just in case you don't know support and resistance, technical analysis 101. Okay. So once we test resistance, if that breaks, it will come back to retest that support, okay? So support and resistance will always want to test. If we're going long and it comes into this level and fails, since this was support, above support, below resistance, right? It will come back up to test former support, proving resistance. Now, you can almost set your watch by that. It's going to happen time and time and time again. This is just technical analysis 101. This is what it does day in and day out. Now, what you want to watch for here, let's say you got spooked out, didn't take this trade. Fine, all good. And I even said this to my members here this morning. What I want you to wait for, and this is what I drew out, let it slice back through and bump its head. That's what I call it. I call it a head bump. Okay, so I want to make sure that the slang that I'm going to use, you guys understand what I'm saying, because it's technically bumping its head. I refer to technical levels, support and resistance, as like physical brick walls. Okay, it's like a car hitting a wall. You're going to get a bounce. And this is what we had. So it comes up, slices through. This is the important part. You see how it slices through? It disrespects that level. It shows no respect for that level. That's a good sign. That is number one. You need to see that slice through. Okay, that's what we want. No respect for that level, and I'm stressing that for a very important reason. Then we wait for it to come back up and test resistance. This is where it bumps its head. Now, I'm going to erase this because I don't want it to be messy. Because I'm going to show you, I'm going to even share with you where to pay yourself on this trade, where to pull profits. Now, some of you may think, well, that's not a lot. It doesn't matter. This is how professionals trade. It's not about getting rich on one single trade. It's about trading properly and correctly and professionally. So when we have a slice through, wherever it bottoms, that is your first level of support. That is an area now that when it bounces and then rejects, it can bounce back up and come back up. We don't want that, do we? We don't want to lose all of those beautiful profits that we just made. So on this, where we execute that short, comes down into that level, pay yourself. You don't need to take it all off, but you need to pay yourself the majority of your position. So let's say you had 10 contracts or 100 shares. You're going to pay yourself about 60, 70% of that position. So in the case of contracts, that'll be 7 contracts is what you're paying. You're only going to hold 3. And if you had 100 shares, you would take off 70 to 75 shares. About 3/4 of the position is what you want to take off. Okay. It's important to do so. Lock those profits in. It's about making money to pay those bills, folks. It's not about getting rich on a single trade. Day trading is not about getting rich, despite what a lot of these losers out there will tell you. It's not about getting rich off of day trading. Day trading is to pay your bills, and swing trading is to build wealth and investing. But that's a whole nother story. I just want to make that clear. That's why you pay yourself at that support level. And then it comes down, it bails, it slices through yet again, comes back up, bumps its head. It's not a perfect head bump, but it doesn't matter. There's even a secondary opportunity to add into that position to then work it down to lows and so on. It bumps its head again. So I want to draw something out because I want to prove to you just how important technical analysis is. So if this is support, it comes back up, slices through, pops up, bumps its head yet again. Okay. It's a little head bump, but it's there. So now we have another, that's the support level. It slices through, pops back up, bumps its head. It tests that resistance. It's not perfect, but it doesn't need to be. Comes back down. There's your support, bumps its head. Those are all opportunities. And the one thing that I want to really stress in this video is the slice through. Okay. It needs to slice through that level. There cannot be any respect for that level. Now, I'm going to draw you something that's going to show you where you're going to maybe question. It's like, did it respect that level? It kind of bounced. You don't know. You're kind of like in between. So let's draw this out for you guys. Hang tight. We'll use this same level. Okay. So comes up, ramps through, right? Kind of pisses around. And then it pulls one of these. It just barely hits. No, that's not a slice. What you need in combination with this is extension. If there's not enough from the last time it bounced, if there's not enough distance, there's no extension, don't take it. You're going to get worked on, because I see a lot of traders, they'll take a trade like this and they think that's a head bump. That has low odds of success. Now, some of you may be saying, well, I've seen it reject that lots and it really sells off. Yeah, you're right. I'm sure it does from time to time. But we want the highest odds success. Okay, that's what we want. We want the highest odds success. And in order to get that, I'm going to draw for you the exact look that you want. Okay, so we're going to draw the same chart. You see that nice mature, we have a nice big slice through, and I'm drawing this exactly the way I want. I want to point something out. I want you to look at the distance between highs and lows. Where is your technical level? Would you say that that is 50%? Those 50% retracements, and it doesn't need to be perfect. Guys, don't turn this into fucking rocket science. It doesn't need to be perfect. That right there, that 50% retracement, that's what you want. You want a nice, healthy relationship between distance and retracement. This is all stuff that I talk about in detail, in even more detail. Remember, this is just the free stuff that I'm comfortable with giving away for free. I go into far more detail than this at Tricktrades, at my service. If you want to learn how to trade like a true professional and have consistency of, you wouldn't even be able to imagine, of your wildest dreams. 92% of our traders, and I can back this up, this isn't just a bullshit statement, 92% of our traders that participate in our Size Up program, which is free, it's included in membership. There's no huge upfront costs. It's just a month-to-month payment. Cancel at any time. Anytime you want, just cancel. Okay? 92% are not only consistent, but they are profitable. We've only been working this system now for the last 4 months. And the amount of traders that immediately turned it around, it is a sight to be seen. It may seem like a big, bold statement, but this is what we do each and every day. I'm not only going to give you an entry strategy, I'm not only going to give you our risk strategy, but I'm also going to give you our full-blown sizing strategy. So if you want to learn how to trade like a professional, come to tricktrades.com. If you haven't already, make sure to like, share, and subscribe. Comment if you have any questions. If you have any questions on this, if you want me to make a specific video, go ahead. I'm always looking for content ideas. Adios, folks.